traders, welcome back to Forex Scope. Today, we're diving deep into the EURGBP pair, focusing on the fast-paced 15-minute and 1-minute charts. If you're looking for clear analysis and actionable insights to navigate these crucial timeframes, you're in the right place. Don't forget to hit that subscribe button and the notification bell so you never miss our latest Forex breakdowns. Let's get started. The support zone is identified by a clear consolidation and multiple touchbacks around the 0.87685 to 0.87706 price range. Observing the data, we see several candles interacting with this level, indicating its significance as a floor. Specifically, the period between timestamp 176-279-5800 and 176-279-7600 shows price action that repeatedly tested and found buying interest at these lows. The low price within this period was 0.87685, and the high price was 0.87717, effectively defining a zone where buyers stepped in. This area demonstrates a pause in the downward momentum and suggests a potential area where the price might rebound from. The clustering of candle lows and the inability of the price to break decisively below this level over these 15-minute intervals point to a strong accumulation and a potential reversal area. The fact that the price spent considerable time oscillating within this narrow band, with multiple rejections of lower prices, solidifies its role as a robust support. This zone is crucial as it represents a price level where demand overwhelms supply multiple times. This resistance zone is identified by a strong price ceiling formed between the timestamps 176-284-7100 and 176-285-5200, with price action struggling to break above the 0.88122 level. Within this period, the price reached a high of 0.88082 and experienced significant selling pressure, preventing further upward movement. The lower boundary of this resistance zone is marked by the low price of 0.88005 during this time frame. The cluster of candles and the inability of the price to sustain moves above the upper limit, specifically failing to breach 0.88122 decisively, indicates a strong presence of sellers. This area represents a level where the selling pressure became overwhelming, pushing the price back down. The multiple attempts to push higher and the subsequent rejections highlight the strength of this resistance. It signifies a price point where the bears took control, establishing a clear barrier to upward price progression. The repeated testing of this upper bound without a sustained breakout suggests that this price range is a significant hurdle for the bulls. The resistance zone is identified around the price of 0.88115 to 0.88122. This level was tested multiple times, showing a strong inability for the price to break above it, indicating significant selling pressure at these high points. Specifically, the price struggled to sustain levels above 0.88115, with candles showing upper wicks that were rejected, signifying sellers stepping in. The high volume observed during some of these attempts to push higher further validates this zone as a critical resistance. The repeated tests and rejections at this price range highlight it as a significant barrier to upward movement, where supply consistently overpowered demand. This area acted as a ceiling, preventing further upward price exploration, and was a point of consolidation before downward movements. The presence of multiple candles with long upper shadows at this price point clearly demonstrates the strong bearish sentiment and the difficulty for buyers to overcome this level. The tight price action within this narrow band before a potential reversal or decline emphasizes its significance as a supply zone. The support zone is identified around the price of 0.88015 to 0.88018. This level has shown repeated instances of price bouncing off it, indicating strong buying interest at these lower levels. The data shows multiple candles finding support within this narrow range, with prices failing to break significantly below 0.88015. The presence of several smaller-bodied candles or those with long lower shadows at this price suggests that buyers were actively defending this area, absorbing selling pressure. The multiple touches and subsequent rebounds from this price point highlight its importance as a floor where demand consistently emerged to push prices back up. This area acted as a cushion, preventing further downward price exploration and serving as a stable base for potential upward movements. The consolidation observed around this price range before upward price action further reinforces its role as a key support level. The consistent rejection of lower prices signifies a zone where buyers are willing to enter the market aggressively. Based on the provided 1-minute chart data for EURGBP, the price is currently hovering around 0.88079. The recent price action shows a notable upward momentum, with the price pushing towards the resistance zone identified between 0.88115 and 0.88122. The Fibonacci levels also suggest a potential upward bias as the first Fibonacci price, 0.88057, is less than the second, 0.88119. This indicates that the market might be experiencing a bullish sentiment, with buyers looking to test higher price levels. The recent candles have shown strength, with some breaking above the upper Bollinger Band, suggesting a potential continuation of the upward trend. However, the proximity to the identified resistance zone means that a sharp upward move might be met with selling pressure. Therefore, the predicted path involves a series of oscillations, an initial upward push towards 0.88095, followed by a slight pullback to 0.88075 as traders take profits or face resistance. The price is then expected to consolidate and attempt another upward move towards 0.88090, before potentially facing stronger resistance and pulling back to 0.88070. Finally, a potential surge towards 0.88085 could occur if buying pressure overcomes the immediate resistance, before further analysis is needed to determine the next significant move. This zigzag pattern reflects the typical market behavior around key resistance levels, with pushes and pullbacks as the price navigates these zones. The strong tick volume observed in some of the preceding candles also supports the idea of active trading and potential price swings.